rising competition among EV companies around the world has facilitated an ongoing price war. Those price wars are pressuring gross profit margins for Tesla and others. And so, with that looming, investors are asking, is this a bottom for Tesla's gross profit margins, or will it fall further before it reaches equilibrium and rebounds higher? So that's what I'm going to look at in this brief video here. So let's get right into it. So that's a question that Tesla got from an asker during its earnings call, which asked, do the price cuts to drive volume, are they eating into automotive gross profit margin? Can investors expect to see this gross margin stabilize or even rise due to efficiencies of outpacing these cuts? And the answer from Tesla was interesting. The answer said, Elon Musk said, the short-term variances in gross margin and profitability really are minor relative to the long-term picture. Autonomy will make all of these numbers look silly. Now, I'd ask you, what would you think if you got an answer like that? Would you think that gross profit margins are going to improve or are improving, or do you think that they've got more room to go lower? I hope you're going to say that they've got more room to go lower. Because if they were going to rebound and they were going to move higher, a consummate promoter like Elon Musk would likely talk about the rebound, the recovery, and highlight how much higher it's going to go and how great it's going to be in the near term. But the CEO didn't do that. The CEO told investors to focus on the long term. Don't think about right now, the painful moments, the moments when profit margins are falling. Don't think about that. That's not what I want you to focus on. Look, and he recommends looking at ARK Invest. ARK Invest, of course, run by popular portfolio manager Cathie Wood, is one of the most bullish investors on Tesla. So I'm not surprised that Elon Musk is recommending investors to go look at the research of one of the most bullish investors on Tesla stock, right? Further saying, I think their analysis is very good. Well, thank you. That's not biased at all. Going on to say, I'm confident we'll deliver over the long term, but can't control the short term. In other words, I think that's code for our gross profit margin is going lower. Our gross profit margin is going lower in the near term. However, that's going to support the long-term value of our business, which I agree with. I think it is going to support the long-term value of the business by lowering the gross profit right now, by lowering prices, because they've already prepped for ramping up production. And so if they're not really increasing production, then it's a lot of wasted investment, a lot of wasted manufacturing capacity that they will have on hand. So I think it might be a prudent move to accept these short-term contraction in their gross profit margin for the long-term benefit of the company. And then the CFO jumps in to say, the only thing in the short term that matters is, in my opening remark, which said we're generating enough money to continue to invest. So saying, as long as our gross profit margin leaves us enough money to continue to invest in our long-term plans, things like autonomy, things like driverless technology, which I guess is the same thing. As long as they've got money to invest in that, I think they're okay with experiencing smaller gross profit margins. And you can see just how much it's going down here. I'll show you a chart. This is Tesla's total gross profit margin, and it peaked at 25.1%, and it's come all the way down to 18.2% over the last several quarters. I would not be surprised if this continues to fall further. Where will it ultimately end? I'm not sure, although I would not be surprised if this falls around lower double digits before rebounding higher. And you could see a chart, longer term chart here, a 10-year chart of Tesla's gross profit margin, and you could see that it was falling from about 2015 all the way to 2018 to a low of around 15%. before exploding higher above 25%, and then now it's been on a downward path again. So I wouldn't be surprised if Tesla's in another one of these cycles where it's going to come down a little bit further, and then once they ramp up, once they increase production, it could rebound again in the future because they have done an excellent job ramping up gross profit margin, operating profit margin, and demonstrating economies in scale. So, in other words, to end this video, I will say that no, I don't think this is a bottom for Tesla's gross profit margin. I think it's going to go lower, but I think longer term, the company will be just fine. Just fine. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.